So today I wanted to make a quick video on a mid-range order block and breakout structure confirmation when you're in up structure slash bullish trend, when you're trading smart money slash Wyckoff methods. So as you can see right here, I am in bullish structure. This is gold here. Okay, so we have a high here, we have a low here, and previously we have a high and a low. So we have two highs, two higher highs and two lower highs. And then there's more structure up here previously. Up here in the future. So, but for right now, we're going to talk about these right here, where you see 50% order block. So when you're trading structure in smart money, the best time frames would be the 1 hour, the 15 minute and up. The 15 minute all the way to the 1 hour. So you're not going to be doing structure on the 4 hour unless you're doing long-term structure. But for short-term structure, for quicker trades, for more often trades, you're going to look at structure from anywhere from the 15 minute to the 1 hour or the 2 hour. But I like to stay between the 15 minute to the 1 hour. So you can write down what I just said. That's how I do it. So I'm on right now 1 hour structure, and I just previously saw we have a 50% order block, mid order block, 50% of the range. Sorry, what is that? As well as a imbalance, a gap right here. Okay, and these are called what? What are they called? Points of interest, POIs. Points of interest. What the fuck is wrong with my keyboard? Sorry. Points of interest. So there's two types of points of interest when we're trading smart money slash Wyckoff. You can either choose when you're beginning, before you learn schematics, you're going to look at trading, number one, you can write this down, order blocks, and number two, imbalances slash gaps. So this is what you want to focus on when you first start out learning Wyckoff smart money. When you're learning your structure, market structure, volume, liquidity, blah blah blah. Before you get into schematics like accumulation, distribution, redistribution, reaccumulation, you want to focus on mastering order blocks and imbalances and understanding which order blocks and imbalances to take. Okay? So, I actually have, I was going to say I had some rules that you can write down as well for when you're trading order blocks. And then we'll get into imbalances in the next video, but I really wanted to emphasize order blocks on this video because we have one right here. So here are some rules for trading order blocks. So you want to look for order blocks with large candles, as you can see here in the red circle, large candles, order blocks. You want to look for order blocks with a minimal wick. And you also want to look for order blocks that have that engulf each other, an engulfing candle. And you want to have, here's another one. And when you're trading order blocks, you want to use a tool called the GAN box, which I'll show you here in a second. And you want to write a line at the center at 50% of that order block. So as you can see right here, that line, it says 50% order block is at the direct center of that block, those two engulfing candles. So, did I write that down? No, I did not. Let me write that down. 50% and you want to have unhealthy price action, as you can see here. So after where you see in red, after this order block, you can see it just shoots up. Okay, just straight up, shoots straight up and takes out that previous structure there. So that's unhealthy price action. You don't want to see price action like you see up here, where it's like up, down, up, down, up. You want an order block that looks like this, that shoots straight up or straight down. and preferably order blocks that knock out previous structure like this. So 50% of the smallest candle, which was right here, which would be the black candle. I have black and white to show you the contrast of buying and selling. So you would do, in this case, buying 50% of the smallest candle here, which is that black candle. And you want that area to be completely unfilled, which means you see this area right here that I'm about to, there we go. So this needs to be unfilled here. So there can't be any other candles that come back down like this. It can't come back down here and then you still say that's order block. No, it has to be completely untouched. So it would be different if it looks like this. If it comes down, doesn't go in that gray box area, it just hovers and then goes up, because then we can look for trades and entries once it comes back down to this order block and we enter at the 50%. So we want to look for this area to be unfilled. So to remember that, you're always going to want to get your rectangle shape here and go at the ends of the black candle, or your smallest candle in this case, whether you're in up structure or down structure, bullish trend or bearish trend. And so I'm going to write that down. So we have area completely unfilled. Hell, why does it keep doing that? Small candle. Don't worry, I'll move it so you can see after I'm done. And the next one is, this is the last one, number 7. Your order blocks typically should be at the top or bottom of your range. Now what that means is, so if you're in up structure, here's a different case and I'll explain why. So when you're in up structure, typically you're going to see the order blocks below the 50% range here, below the 50%. And the reason why I'm taking a trade off of this order block is because schematics happen at 50%. Specifically, the reaccumulation schematic usually happens at 50% of the trading range of price, 50% equilibrium. So you're going to look for order blocks. This happens sometimes, typically at the bottom or top. So in up structure, you're going to look for order block at the bottom of the range, and sometimes the mid like this, only if it's big like that. And then when you're in down structure, when you're in a bearish trend, you're going to look for order blocks like this, reversed at the top, the sell front, because that's the premium area that you want to sell. You don't want to sell at discount prices at the bottom of the range when you're selling. It makes no sense when you're in bear market. And what that looks like is this. So if you're going like this, selling, you're in the bear trend, right? You don't want to wait. You don't want to continue selling when it's right there. What you want to do is, can I move this up? You want to wait for price to come up 50% of the range, which is here. Price to come up and look for trades here or trades here. So anywhere up in this area, which is premium, P for premium, and D for discount. So when you're selling and when you're in structure like this, you don't want to take trades at the bottom when you're selling. You want to sell trades at the top premium part of the trade range, okay? And when you're buying, you want to take trades look for trades at the bottom. So when it goes like this, when you're buying, or you can write the structure like that, however you want. You want to take trades. This is the 50% of this structure right here. You want to wait for price to come back down to the discount area where prices are cheaper, because that makes sense. Because when you buy something, you want it to be cheaper. You want it to be cheaper and the asset to be, less expensive. So you're buying here, and then price will appreciate and go up. So let's get rid of all that stupid shit, because I don't want all this on my screen. And let's, oh wait, that is the last one. Okay, so those are the rules for order blocks. And also, I'm going to add one last rule. You want your order block to break structure. Write that down. You need a... Why does it keep fucking doing that? I don't understand. Excuse my language. You need a BOS, a break of structure. break of structure. I'm too lazy to oh, it's already capitalized. So screenshot this, write this shit down, whatever you need to do, write all of it. Screenshot all of it. Write all of it down. Take all of it, all the notes. So don't ask me in the comments later. All right, and just So these are the rules you need to keep in mind when you're trading order blocks. They can be mid-range when you're in up structure like this. You can when you're taking buy trades, they can be mid-range like this if it's large, or you want to look for ones at the bottom, the discount area of the structure here. Okay, and remember, when you're first starting out before schematics, you want to use or you want to look for order blocks and imbalances. And if you're wondering what a schematic is, the definition of an actual schematic is if you're trying to understand or designing a system, okay, like a building or something. Schematic diagrams are used to describe a high-level functioning or nature of a system or a process, of a system or a process. So in Forex, in trading schematics, these are used to understand the market. We don't have any on the screen, but we will in other videos in the future. But right now we're focusing on the basics. But schematics are basically used to understand the high-level functioning of the market that people aren't aware of, because people trust technical analysis and they don't really include the fundamentals and what smart money and the people that control the markets actually do, which is why they're scared of taking trades like this. You see how it's going straight up? Most retail traders tend to flee away from charts that look like that whenever they see that or get scared, or sometimes they'll FOMO into the top, and you know how that all goes. But yeah, we'll talk about all of this in another video. If you're interested in crypto and all that stuff too, click the link in the description. I have a group. There's also an ebook for crypto taxes. Also, if you want a quick passive income that's really simple that you can just download and it can just run in the back for you, click the link. There is a link for a passive income stream in the description. But yeah, that's all I wanted to say. We'll talk about everything else in another video. This was just a quick video, and I'll see you guys later. Peace.